moving on then, let's take a look at IndusInd Bank that reported steady set of numbers for the quarter gone by. When you look at the profit for the quarter, that grew 15% to 2,346 compared to last year, in line with analysts' expectations, but meanwhile provisions fell about 4% compared to last quarter. This is what we got from the management also. Take a look at what they had to say as well.
Every bank should evaluate its technology infrastructure to keep pace with the scale in operations which you are doing. I think your UI UX capability which you are building, I think fraud management capability and KYC capability on real-time online basis, that you are able to weed out the bad accounts and the good accounts very well. And I think that's a capability which we have also, we've learned over a period of time. So it's not that we were born with this. So I think we've learned, but are we fully there? I think it's an evolution. And if you are doing the right things and you can demonstrate the right things, that is more important. And I believe this is one line where I don't put budgets onto it. So we have to continuously expand in this sector. And I think you got to be in compliance with the regulatory guidelines. You got to be in compliance with what the competitive environment is.
All right, that's the word coming in from the management of IndusInd Bank, but we also have my colleague Gaurav who's joining in to break down these numbers for us and make sense of them. Gaurav, hi, good morning. Take it away.
Talking about IndusInd Bank's Q4 FY24 numbers, if you look at net interest income, it increased almost by 15% on a YY basis. PPOP showed a growth of 7% because we saw cost to income increased in this quarter, and at the same time, employee expense as well as other expenses increased. And if you look at provisions, that actually declined, and that is why we saw PAT increase of 15%. Now, if you look at the numbers, those were fairly in line with what the street was expecting. Apart from that, if you look at some of the asset quality metrics, GNPA and NNPA remained stable on a quarter-on-quarter basis. Apart from that, if you look at net interest margins, that actually was a little down. So, for example, 3 basis point down on a quarter-on-quarter basis to 4.26%. But overall, if you look at the advances and deposit side now, advances mix is now at 56% retail advances, and at the same time, we saw retail loan book grew almost by 23% on a YY basis. Even in deposits, we saw 14.4% growth for deposits, and at the same time, we saw retail deposits grew almost by 151 basis points. Apart from that, talking about the asset quality, there were some plus points in this quarter's results. So, for example, gross slippage is actually reduced to 0.44% versus what it was at 0.56%. Even if you look at credit costs, that went down to 111 basis point versus the street's expectation of around 120 basis point, which is actually positive for the bank. Apart from that, bank also mentioned that they have contingent provision of 1,000 crore rupees, which was actually a key concern area during the last quarter's result. And lastly, if you look at any kind of improvement in the asset quality is actually positive for the bank, but we will need some kind of commentary coming up from the management on the back of the cost to income ratio, because that has been increasing and that is now at 48.2%. So anyhow, the numbers were great, actually in line with the street's expectation. We would need some kind of commentary from the management about overall good set of numbers coming up from IndusInd Bank.
All right, thanks Gaurav for the earnings fine print, but let's also take a look at what the brokerages had to say as well. So when you look at the ratings coming in, flashing on your screens right now, when you look at Macquarie stands, they've maintained an outperform rating, and IFL also has a buy rating on the counter. But let's take a closer look at what Macquarie had to say then. They've, like I said, maintained that outperform rating, and when you look at the target, that is at 1,900. They've talked about lower provisions that were offset by higher OPEX. So that is something that Macquarie highlighted as well. And they're also saying that decline in slippages is a positive for this particular counter. They're also saying that IndusInd Bank remains one of their top picks in the space. So that is the word coming in from Macquarie. But when you take a look at what JP Morgan had to say, then they've also maintained a neutral rating. They have a target at 1,450. They're still waiting for a clean quarter from IndusInd Bank. And they're also saying that reserve drawdown aids the credit costs for IndusInd Bank. That is something that JP Morgan highlighted. But then when you look at what IFL Securities said, like I said, they have a buy rating on the counter, but they've cut the target price to 1,680 from 1,870. And what they've also said that is that going forward, they expect NIMs to be stable in the near term. In terms of elevated costs, they've talked about elevated costs amid franchise investment as well. And when you look at their estimates, they've cut financial year 25 to 26 estimates by 2 to 5%. In terms of ROAs, then, they've also said that they expect stable ROAs versus decline that they're penciling in for some peers. So that largely is the word coming in from IFL Securities as well, and this is what the brokerages had to say.
Well, absolutely.
If you like this video, then like, share and subscribe to ET Now.